right, sit down. Let's get started this morning. Welcome, everybody. It's Don Kaufman here. It is December 30th, 2025. The S&Ps this morning are massively unchanged. I think that's probably the proper way to put it. Let's had to turn off the heater over here. Getting a little toasty in here. The mornings are very cold here in Arizona, and it warms up significantly. I couldn't believe yesterday we were like 74 degrees. I'm saying this basically to torture a couple of you that are. I think it was somebody in chat was talking about it was like -10. It's good. It's good temperature. It's lovely. I'll be back in the cold this weekend. I'm going to go back up to Flagstaff this weekend, so I will feel that pain, but I like it. The Nasdaq's a little weaker on a relative basis here as we come into today's cash open, but in today's trade, the volume's really light. Yesterday, at this exact time, down to the second, we had 126,000 contracts. Right now, we're not even doing 100,000 contracts, so it is definitely light and fluffy. But mind you, there is a decent expected move. The expected move for today is bigger than it was in yesterday's trade. So I'm saying that because I want you to know, like, it doesn't matter what we see in volume when that expected move is. It's almost $30 for today, so it's just shy of $30. But maybe it's the FOMC minutes that are coming out later today. We'll discuss that a little bit. Nevertheless, though, there is some price action being priced for the trading session. So as I said, as we're coming into the cash open, to begin with, you've actually got like Nvidia flat into the morning, and Broadcom is relatively flat. And I mean, I don't see a lot of movement, a lot of price action here, which dragging the Nasdaq right now. It's clearly not Tesla. Tesla's actually up. So it's a bit of a mixed bag of goods, though, coming into the cash open. It's fairly slop-tastic, and the financials here are actually higher. So the advanced decline line appears to be slightly positive, with the markets slightly negative. If you're looking for volatility, there's no sign of it anywhere. And of course, the metals are on a bid back, a big bid back. It's not over yet, people. Gold, silver, bid. So the cash open, well, that's interesting. The advanced decline line is much closer to 50-50 than I would have anticipated. Just a few minutes ago in the pre-market, I was looking at this, and it was about 60, 65 stocks that I had guessed that would be up, but here we are with almost a 50-50 AD line. The ticks out of the gate this morning are well, who cares what they are? That's not gonna matter anymore. Nobody cares when they're like a negative like 173, because that's pretty craptastic. And oh yeah, did I mention that we're massively unchanged? So taking a look at the SPX, let's start with the SPX yesterday. Okay, do you know what happened yesterday? Not much. No, we had a little bit of sell side activity yesterday. Just a little bit of sell side activity. This is really weird. Why does this look like 5 trading sessions? I have to figure that out. Okay. Did I go too far? No, that's right. It is right. Okay. It's tomorrow. This day, though, is closed. I don't know why this is on the chart. This is closed. That's January 1st. I'm just realizing now that in my expected move calculation, you see right here, that's the first, and this is the second. The first isn't really a trading session. So why, okay, is there something for it? The charts should have negated the holiday trading session. It has not. Interesting. Very interesting. To kind of continue on, as I said, the advanced decline line, a little surprising out of the gates, very close though to a 50-50 in here. Apparently there's an extra day packed in over here. We'll have to figure that one out one of these days. And looking down the list, some of the usual suspects, everything is just basically slopping around right now. Okay, chicken's done. There was a bid back over the last few days to VVIX, but VVIX is still relatively dead. We're going to talk quite a bit this morning about volatility. That is going to be a topic of conversation because everybody keeps emailing me and saying, why aren't you buying VIX right now? Because it's already priced in. And it's just not, generally speaking, people do not have a great understanding of volatility products. We've got, by the way, archives of this stuff. I even did a volatility mastermind, but preemptively of the volatility mastermind, I give everybody just a good lesson on vol and volatility products. But this is so important because the volatility products, they're just not what people think they are. They just aren't. Like, if you buy like you know, uh, VXX, the VXX, okay, it's priced in just like, yeah, the VXX could go up, but most of the move would be priced in just like it is in VIX. And we're going to discuss that here in a few minutes. We are seeing a little bit of sell side, maybe in the financials. So this is a surprising area to me and an area that I'm probably most critical of in the markets. Yes, we're going to go down and look at silver. Okay. It's so exciting. It's up 7%. Okay. Do you think it was going to go quietly off into the night? It's good stuff. It's good stuff. But when we are taking a look at the financials, okay, the reason that I am so critical is I've even heard analysts promoting right now, the financial sector and so forth. Can you give me a decent reason why? All right. What are they? They're cutting interest rates. Okay. All right. Consumer debt might be in trouble. That's not exactly a positive for the XLF. Like I can't come up with fundamental reasons and reasoning for the financials making such a significant move in such a short period of time. And the longer, and I've said this many times recently, but the longer that I'm on, in here and in this business, okay, and especially on TheoTrade, uh, the more I block out what everybody is saying. Like I actually ironically listen to some of the noise that's out there, the media, the analysts, okay, because I'm just curious, and it really is like curiosity. Nothing that anybody is saying, okay, has any relevance to why things move anymore. None, zero. Okay, I'm going to say that again because I think it's a pretty bold statement. Nothing anybody is saying in the financial media has any relevance, zero, okay, relevance to why things are moving. And this, okay, is purely a trade. No matter what you think, okay, over here, and it's just I don't really care what you think, but that's up to you. But this is a product that was up 6% a month ago, okay, a little over a month ago, 5 weeks, and then was up 16%, okay. But the financials, literally, 10% better off than they were just a few weeks ago. And of course, the answer to that is absolutely not. Right? What transpired, and one of the major drivers of this sector would be like Berkshire Hathaway. And interestingly enough, Berkshire Hathaway here is not the driver. I wanted to bring that up because this is the biggest, pretty much constituent in there. So then it has to be some of the banking stocks, and you start to look at stuff like JP Morgan. And from the lows in April, okay, where they were down 15% on a year-to-date basis, they're now up 35%. Okay. It's all going to be okay. There's no reality anymore. Okay. That everything taken in the context of the near term. Let's say that the near term is a month or 2 months out. Everything in the context of the near term, okay, is just all trades now. It's not, what it classically and what people classically would represent as the substance of like fundamentals. And I'm not, by the way, pushing technicals out of the way, not at all. But to describe price action and what people are saying about price action, okay, it's completely and totally worthless, which it's always difficult for me. And one of the reasons I listen to some of this stuff is because I still do like Charles Schwab TV like once a week. And the more I do it, and and the more I listen to that stuff, I'm just like, this is completely irrelevant. It's all completely irrelevant. The same would be true, and I'm headed over to silver in a moment, but that's why now more than ever, like towards the end of the year, you really start to look at this stuff and be like, okay, I mean, I think you can make an easy argument that the financials are up 14% on a year-to-date basis. Okay, it's well deserved. Sure, whatever. Okay, but almost all of this is just trade actually pushing markets a little higher. And by the way, I like Ed just said the whole world's like that. Okay, there's definitely some truth to that right now. There's absolutely no relevance though of anything that's being said. Okay, not even a shred, a semblance of relevance to what this marketplace does anymore. Everything, okay, has become trade. And when I say everything's become trade, it's it's just basically market forces, okay, and order flow drive order flow. That's it. Okay, so you look at something like silver. Let's cruise back over to silver. Silver, okay, if we're correct, okay, about silver, and we are correct about order flow, silver in the overnight trade. Just listen very carefully because I was going someplace with financials and then I wanted to come over to the metals. Silver is a very interesting product, even more so than gold. And the reason that silver is such an interesting product versus gold is that silver, specifically the SLV, okay, has a tremendous amount of volatility. In the weekend update, when I was talking about it, it was like, 50% implied volatility. This crap is all the way like 75, 80% implied volatility. What the hell's going on in there? The thing is rocking. Okay. But mind you, SLV, okay, is the ETF. And this is where people go, yeah, but it's the ETF and it's trying to catch up to the silver futures. Okay. No, I argue, okay, that the SLV options contracts are actually the cart leading the horse. And if I am correct, what will happen is it will completely change course after a cash open. You go, well, what do you mean? Okay. So the bell goes off in the morning, right here. The bell goes off right there. And when the bell goes off, it opens up options trading, which, okay, SI doesn't really have any real options trading. SI is the actual futures contract. Nobody really trades the futures contract options, but they definitely trade the SLV options. So the overnight moves that you're seeing inside of silver, okay, get largely interrupted and possibly negated because everything that you're seeing in the overnight trade in the SI, okay, yeah, there's some real buying activity and some selling activity, but almost everything you see in the overnight trade in SI, it's predominantly hedging activity, which is market making firms mitigating risk. Yeah, and silver is definitely traded in places all over the world, okay? But as I said a moment ago, none of that crap actually matters because the contract size that moves, okay, when the cash open happens here in the United States is nothing less than phenomenal. And it's this contract size right here, okay? We're 11 minutes into a trading session. We've already traded 182,000 contracts. That, okay, is the order flow driver. And what it's going to do is the second that these option contracts start to trade, the trades themselves, okay, have to be hedged. So dealer gamma, basically, if you come in and you buy calls, I'm buying calls, baby. That is the market making firm has to sell the calls and then they have to turn around and buy shares to actually hedge that. And it's done like, people think about like there's a person behind it like, buy some calls, okay, then sell them the calls. It's all server driven, okay? They hedge the deltas, okay, in billions of a second, okay? not millions of a second, billions of a second. Everything is measured on their side and the dealer side, okay, in nanoseconds. Okay. There's milliseconds and there's, I can go on and on and on about, time and so forth, but they're measuring in nanoseconds. And it's just, it's wild because people are so caught up. And I'll just give you a perfect thing right here. Somebody just, is it true China requested delivery? Who gives two beeps about who wants delivery? Okay. Nobody cares about any of that stuff. This is SLV. You're not getting delivery here. This is a futures contract. Nobody gives two craps what anybody wants. It's not even going to impart like any, what? Who cares if somebody takes delivery? That will impart zero pressure, okay, into this marketplace. You go, how can you say that? Figure out the notional value of this trade right now. We've traded 200,000. I just want to make a point here. We've traded 200,000 contracts, okay? People are still thinking like it's 10, 15 years ago, right? They're still thinking like, and I'm going to give you a perfect example. We were talking the other day internally here at TheoTrade, okay? And Garrett was like, oh, it was like $40 billion got injected by the Fed. And are you listening, Garrett? I hope Garrett's listening. Okay. He was like, $40 billion got injected by the Fed. And I'm like, $40 billion. Where the hell are you living? $40 billion is nothing anymore. It's absolutely nothing. Okay. Nvidia, you want $40 billion? Nvidia has 24 billion shares outstanding. If it moves $1, that's $24 billion of liquidity that moves. Who gives two beeps about your $40 billion? Ain't nobody. This is a crap day. Tesla's moved $4. It only has 3 billion shares out there. So forgive me, okay? But Tesla has only moved, it's moved about $12 billion of liquidity. When we start to look at things, that people have completely lost perspective. Oh no, China's taking delivery. It's a drop in the bucket, big guy. Drop in the bucket. Nobody gives a damn anymore, all right? This is 200,000 contracts. Granted, it's a $68 product, but if you start doing, okay, some rough and dirty math, you guys ready for rough and dirty math? Let's take the rough and dirty math, damn it. So you take 200,000 contracts, okay? That's 200,000 contracts. And there's a contract multiplier of 100 on here times 100, okay, equals. So it's the equivalency of about 20 million shares. But there's about a 50 delta. Let's assume that everything that traded on here is like a 50 delta, meaning it's not really 20 million shares, okay? Divided by 2, it's about 10 million, okay? Assuming that all the option contracts that trade are an average of about, we'll say 50 delta, okay? So it's the equivalency of about 10 million shares have traded. This is just the options. I'm not even including the shares because the shares trade off the options. And then multiply that by like 68, which is, price. And that's the kind of money that you're moving. And it's only 745. I mean, this is not even $1 billion. It's only $680 million worth of trade. So about $680 million. Okay. By the way, that's probably not far off. This is what I would term notional value. By the way, this, okay, is the notional value. Hold on. I'm having problems over here. This is the notional value off here. It doesn't even include the fact that we've already traded 22 million shares. So this really gets almost tripled. Okay. I'm just giving you an idea like how much capital really trades through markets, and people are worried about like physical delivery. And then they're not going to be able to deliver me silver. Who cares? Okay. How much silver did you buy? All right. They're like, I own, okay, $1,100 of it. Even China and sovereignties, okay, are nothing anymore compared to financial markets. Okay. It's interesting, right? I think my wife put my cup in the dishwasher. It's kind of pissing me off. Tastes a little soapy this morning. Screw it. I'm cleaning out my insides. Lemon pledge. I'm cleaning out my insides. I like it. Okay. By the way, when I'm talking about short-term price movements, no, I defined a month, 2 months out. That's short term. Okay. But if you want to make an argument that in the long term, valuation matters, okay? Which stock do you want me to bring up in that instance? Huh? Did you want me to bring up Walmart? Did you? Did you want me to bring up Walmart, which has a PE ratio of 39, which makes no freaking sense whatsoever inside of a consumer staple. But now everybody's like, it's not really consumer staple, it's probably consumer discretionary because they have big box items. Okay. I buy stupid things at Walmart all the time. By the way, the difference between consumer staples and consumer discretionary, I need toilet paper. I need toilet paper. I did not need an air hockey table, which I totally bought yesterday. I am so proud of myself. Okay. I've wanted one of those things forever, forever. Okay. By the way, the guy in the store too, he was like, buying this for the kids. And I'm like, hell no, I'm buying it for myself. Get the hell out of here. Buying an air hockey table for my kids. Okay. Buying it so I can smack the air hockey puck into the kid. Yeah, it's fair enough. All right. Inner child. Really? Let me just, I'm telling you, there's some soap in my cup and it is pissing me off. Okay. Oh, I found it. Okay. Oh, she is guilty. She's guilty. She's trying to kill me. Anyway, no, there literally are some bubbles over here. Okay. There are some bubbles. Okay. It's really, by the way, it's not an inner child. It's always child. Okay. Always a child. Um, uh, Texture and tell her off. Okay. No, that's never a good idea. that that one, I don't fall into that trap. Anyway, okay, she'll somehow turn it around and completely blame me. It's all right. So I'm on to this. I am on to this. And then make fun of me later in the day for, bubbles, like burp and like a bubble will come out. And they'll be like laughing hysterically. Okay. Um, so in all seriousness, okay, when I was talking about Walmart a moment ago, like there's, you can't make a valuation. Like I know because somebody's going to go, I don't use PE ratio. Whenever I talk about like a PE ratio, okay, I don't use PE ratio. The PE ratio is 39. 39. Okay. You do realize that Apple, is less than Walmart because, valuation works, right? Are we having fun yet? And then we have Costco with a 46 PE ratio, which makes absolutely no sense. Okay. Planes are falling out of the sky. All right. There you go. Negative 16. Yeah, I brought up Boeing. Okay. It's good stuff. And Caterpillar, they only have a 29, but like, look at the price, okay, of that thing. It's pretty wild. Continuing on over here. Okay. I don't know how I got on the subject of the air hockey table, but I was very excited. It's going to be like 5 or 6 weeks though before delivery. Weighs like 480 pounds. They want no part of that. Look at SI though, ripping, absolutely ripping. So I was talking about order flow, okay, and how wild it really is. But that order flow, look at this. Now we were talking about 200,000 contracts. There was 186,000 contracts when I started. Now there's 296,000 contracts, and literally like 10 minutes has gone by. So how order flow is just dictating, okay, markets. And at that point, markets are still really efficient. And when I say efficient, I don't mean efficient in the terms of like, people will make an argument like Intel's really worth $37. I'm not telling you that Intel's really worth $37. Okay. I'm not. Okay. I'm the first one to tell you, I think that's probably a pile of crap, but that's what somebody's willing to pay for it right now because nobody cares. Okay. Nobody cares. They're just trading in and around it. And that the financial markets, okay, are not what most of us kind of grew up with and like the classical representation of financial markets. Okay. Your classical representation of financial markets has been they're an excellent pricing mechanism and they've been a good discounting mechanism, for price discovery. Okay. I don't believe that for a second anymore. I really don't. I believe that they're efficient because somebody's willing to pay $668 for Meta, which is a freaking website, not even a very good one. I know they have Instagram. Instagram made all the difference, right? Okay. Oh, but what about WhatsApp? Okay. I'm an American. I don't use WhatsApp. Does anybody here actually use WhatsApp? Okay. Here in America, we do not use this. All over the world, though, that they do. I've actually noticed, though, the Islanders, when I'm on the island, they use WhatsApp too. Okay. I don't use that. I was just kind of curious. Okay. Jim is a yes. He uses WhatsApp. Okay. Joyce, you're an expat, Joyce. That's totally different. Okay. All right. Yeah. Joyce is that doesn't even matter. It's exactly my point. I'm just curious. Okay. People actually use that crap. Okay. Yeah. So you might call overseas and so forth. All right. Signal. Okay. I think they've cracked that one too. All right. Onward and upward. Okay. Sorry, I'm actually, yeah, to call abroad over here. I had this weird instance where it was a couple months ago with AT&T. My buddy, like one of my closest friends, he's lives in Australia. He's officially an Australian now. He's dual passport, but he's a professor down in Australia. So he calls me, okay, and he just called me. Apparently, he called me off of his phone. He didn't. Normally, we would use like Telegram, or we don't use WhatsApp or something like Signal. Okay. Anyway, he must have called me from his phone. And on my phone, like you really can't tell. It just basically comes up, you know, Phil calls. So I call him back. Don't even look because I assume he just probably used Telegram or something. So I call him back, and I was on the phone with him for like a good hour and 20 minutes. And when I got my AT&T bill, those bastards charged me like $280 for the call. So I had to, get into it a little bit with like AT&T, which took another probably hour of my life to tell them they suck. Okay, by the way, that was it for me and AT&T because they would not take off the entire bill. I was just calling somebody back. Okay, they're like, sorry, you don't have that calling plan. We're going to charge you, okay, 200 plus bucks for this call. And I'm like, so if I hit Telegram, okay, or WhatsApp, it's completely free. But if I use you monkeys, and they were like, yep, that's the way it goes. So I'm done with AT&T. And the most painful process of my life has been moving from AT&T over to T-Mobile. Absolutely painful. Okay. I don't suggest ever moving a mobile carrier. Okay. By the way, T-Mobile's been fine, but the actual process, they make it so hard to move your account. It actually reminds me of like 25 years ago, the brokerage industry. They used to make it really tough to move your brokerage account. So when Thinkorswim was coming up in the world, like we would compete, Thinkorswim, when it was its own company, would compete against like a Charles Schwab. Charles Schwab would give people a hard time about ACATing out to Thinkorswim. And it was such a tough time that the SEC and FINRA had to get involved and be like, you guys have now a couple of hours, that's it. You get it done, or they're going to get fined. That's how far it went. They need that loud in the telephone world, okay, which they clearly do not do. Look at this, the S&Ps, they're a running. A little bit of positive movement inside of the S&Ps. I was just looking. There's not really much data coming out today other than the FOMC minutes. I know there was Chicago PMI. No, nobody cares about that. Let's dig into some of the volatility trades here this morning. I've gone down the road of valuation deeper than I had expected. The bid back under SLV. Don't get too excited just about it just yet. It is such an interesting thing, though, to watch as the metals are seeing just. I mean, this is really it's epic volatility in metals, and I don't think that this is very healthy, though, for markets. Okay, I mean, because this is wildly inflationary. It's everything you guys use. You don't even realize, like every computer, how much silver is in semiconductors is out of this world. Anyway, um, watching the metals though is interesting because no matter how many times I've seen moves like this, I even said yesterday, okay, just because we had the big down day doesn't mean it's over. Like this thing could still, pop back to the upside, and is obviously today, but the day is young, and this is where I don't mind saying, like, you use all the technicals you want. Here, I think that technicals to some degree do get thrown out the window. So now I'm like, ripping on fundamentals, but I'm definitely ripping on some technicals here too. And the reason that technicals get thrown out the window is this is just justification, it's just order flow. Whatever's going on the tape right now, okay, is going to continue to go on. And what changes trend is literally some of the hedging tactics that are used. And that's, again, almost 400,000 contracts, shockingly large. Okay, let's move on. I want to talk a little bit about volatility and a bit about skew. Before I do that, I'll just give you guys a heads up. The entire trading week was expecting, okay, a $63 move, which is really light for 4-day trading week, but we still have an implied $30 move today. Yesterday, okay, markets, should I say they sold off yesterday? Drifted listlessly lower yesterday. And what was interesting about yesterday is as the markets were drifting lower, I just want to show you something about yesterday. As the markets were drifting lower, the volatility actually was going down. And it gave me an excellent opportunity yesterday. And the excellent opportunity, check this out. Some of you guys would know this, some of you don't. Okay, let's go into spiders. Okay, look at that. That is a Christmas tree. Okay, and the Christmas tree was opened on December 18th. Okay, and closed on the 29th. And this one is over a 40% gain. Unheard of, absolutely unheard of in this short period of time. This is a March trade. Effectively, we took like next to no risk on this thing. You just put it on December 18th, close it on the 29th. What's 10 days amongst friends? You realize there's holidays in here as well. Okay, a handful of trading days to make, okay, that kind of return is freaking spectacular. And the reason that I closed the trade, you're like, why would you close the trade for 40, 44%? Why not just wait? Because even today, Don, even today, you could have closed it for less. Okay, I get it. But as we come closer to the end of the year, okay, there is a decent probability that volatility is going to start to pick up. So it's going to be a matter of days, maybe even hours. You should see volatility start to pick up. And I'm not just talking about VIX. We're going to get into this right now. So a great trade in Christmas trees that also found, okay, a decent trade in the volatility futures, the shadow clock, okay, and was able to execute that. It's much longer than I normally would put on, okay, but the pricing in here is good. So let's get into it. Let's talk for a moment about a low VIX, okay? First of all, everybody sees a low VIX. Yes, okay, but you can't trade this. I'm going to reiterate that. I see the low VIX. A low VIX is not like the VIX is not a tradable product like you think it is, okay? And of course, you're going to go, what are you, crazy, man? I go to the VIX options. And no matter how many times I say this number right here does not price these options, does not price these options. VIX options are priced from volatility futures. Allow me to explain, okay? Allow me to retort. If you will, take a look right here, okay? I'm going to zoom it in on the screen and I'm going to highlight the hell out of this. Here's the VIX at 14. This is VIX options that are 40, okay? They're 49 days out. Look at the 1850 calls and the 1850. Here's the puts. Here's the calls. You with me? Okay. Watch carefully. If the 1850 calls are trading for $2 and the 1850 puts are trading for $2, that would mean the VIX is not being priced at 14. It's being priced 49 days out at 18.5. Okay. There. Well, the power invested in me. Okay. This is where the forward VIX is trading. And if you want to check it, just go to the volatility futures that are 50 days out and look, they're trading for 1840. See? 1840. Right? So it's very important to know. And you're like, so what the hell does that mean? It simply means, okay, that the market is ahead of you. Okay. The market already knows that the volatility is going to go back up. Right? It's important. All right. The way Mike W says, unable to close my Christmas tree. You may have to actually email us because there's no way you're not closing your Christmas tree, man. Christmas tree was easy to close. Okay, you got problems. You got problems. Mike's like, tell me something I don't know. I got a lot of problems with you people. Yeah, no. So what I'm saying is I don't give two craps that the VIX is sitting at 14. The forward future is already pricing it at 18 and change. That's 49 days out. 49 days out. So what would it be priced? Okay, 22 days out. 22 days out, the VIX is already trading at 16. Okay, that it's just it's a dead product. Like you're not looking at VIX right. But okay, I kind of have the feeling that volatility is going to go up. I agree. Volatility is going to go up. So what do you want to do about it? Okay, what do you want to do? You're not going to be able to buy out of the money puts cheaply. Okay, because skew is also sky high. So somebody was mentioning an RTS, okay, which is a risk twist spread. The problem with the risk twist spread, okay, and there is a problem with it. So look, vol, okay, skew is through the roof. Vol skew is still up at the 150. Okay, when risk twists were working really, really well, okay, most of the time we were under like a 130, literally. Okay, the best risk twist spread I ever did was right before and coming into COVID. Okay, it was right in this neighborhood here. Holy crap! I put it on in February. It was in the XLU. I put it on in February. Skew was like 119. That crap exploded. Every dollar I risked, I took out, I think 12 and change. I had that one on in size too. So the skew is too high. So here, and I want to put this in the most simple context. If you think that volatility is going higher, okay, the most simple context, what are you really saying about markets? You think markets are going to go down, okay? Just buy a damn put spread and be done with it, right? Try not to overthink this, okay? Try not to overthink this. Again, the truth is in this context, it's not what you think it is. It's just a matter of like, if you're bearish, be bearish, because use the skew in your favor. I'm actually going to go 52 days out. I'm going to go 52 days out. By the way, I swear to you, I can feel bubbles coming out of me right now. I don't think I'm going to drink the coffee anymore. Just a little bit, just a little bit more. Okay. Maybe I take the top off of it. I don't know. She's definitely trying to poison me. She's definitely trying to poison me. So I'm going to write a strongly worded email to my wife about this. Using ChatGPT, I'm going to write a strongly worded email about how she tried to poison me with, whatever the hell is in there. Okay. Anyway, if you're going to bear up, just bear up. Bear up. Okay. And to do that, oh, this is weird. It's like jumping in weird strike increments. Just give me a second. I'm looking. Here, look, that's a $10 wide spread for $2. Okay. And you go, well, why should I buy that? Then we have to go all the way down to what? 665. Of course we go down to 665. Yeah, that's pretty good. And you're paying $2. And I'm going to tell you why you're paying $2. Okay. You would pay $2 for this trade because you're buying a 13.7 vol and you're selling, okay, a 14.8 vol. Interesting, right? The skew is demonstrably in your favor. I can say that. It's a huge skew. It really is a huge skew. Because the option you're buying is a 13.7 vol. The option you're selling is a 14.8 vol. It doesn't sound like a lot to be like 1 point, whatever, vol skew, 1.1%. But the truth is that's actually a really big number. It's a really big number. Just to give you a comparison, how far out of the money are we? Okay, let's come over here. Let's get blast all. How far out of the money are we? So we're just over like $10 out of the money. We're not very far out of the money. Like it's not like this is not like a huge move. But if you went a little bit out of the money, like let's get crazy. Let's actually show you buy deep and wide. I'm actually going to bring up a call spread. Let's bring up a $10 wide call spread. There you go. Okay. So a $10 wide call spread. Now the $10 wide call spread is about equidistant out of the money, but the call spread's trading for almost twice the put spread. Okay, good. Okay. Yeah, maybe. All right. Sorry, I'm reading over here at the same time. Anyway, as we take a quick glance over here, sorry, there was a cancellation on a Schwab show, which I'm not going to respond to them yet. I'm reading over here. Gotta stop looking at my email. Got to stop looking over on my email. Okay. I have a whitish hue today. Is it a whitish hue? Okay. I have lighting in here. Oh man, it's Zoom. Okay. Maybe I haven't seen the sun in a long time. The point that I'm trying to make is the call spread costs almost double the put spread. So the put spread's a damn good deal. I love those kinds of trades. I really do. Okay. I mean, do I want to send something out like this though? Okay. I don't know. I mean, do you guys want trades like this? Okay. This is a bit of a shot. It's a much lower probability trade. I'm trying to fill it for $2. $2. Okay. Cancel, replace the order. I'll come to 202. I think I can fill that. There you go. So I am doing this in the spiders. Okay. And I'll put it in here. Okay. And this is a longer term, okay, bearish trade, but profits from an increase. So this trade I'm saying is profiting from an increase in volatility, but the truth is, okay, it's not really that volatility going up that's making you profitable here. It'd be the marketplace going down. And that's, that's kind of what people are looking for. And I went 52 days out because whenever I buy a spread like this is a really big spread. It's a $10 wide spread. But again, like I don't really have, like I love doing trades like this, but I don't really have a category for this. Like when I send this trade out, if I send this trade out, clearly it's not an in-out spread. I can send it out as a 3 trades a week, but then there's going to be people with $2,000 accounts that are like all pissed off because you're like, you put me in a trade and I've been in it for weeks. Okay. And it can make a lot of money. Okay. But the market, it doesn't really have to tank. I don't want you to think the market has to tank. It has to go to what, 65? Okay. That's like right here. It could be there in a day. Like, look at that move. Okay. That's easy. It's an easy move, but you have 52 days in which this can occur. And if it is profitable, then you can actually roll it even further down. I don't know. If you like it, do it. If you don't like it, don't do it. Okay. If you don't like it, don't do it. That's okay. I'll still sleep okay tonight, knowing, okay, that you did not bear up. Cancel replace order. 203. By the way, the price, even with the markets going down, the price of this won't move that much right now because if the market sells off just a little bit, the skew will actually help you. So the price shouldn't move much today from like $2. Okay. And if you ask me like, when should I get out of this? I don't know, when we're under 665, like don't even call me, don't talk to me, don't even look at me until we're under 665 on this trade. Don't even look at me. Okay. All right. Anyway, okay. It's a big boy spread. Big boy spread in the spiders. Okay. Take your shots. Take your shots now. I'm still in Walmart. Okay. So what am I doing with Walmart? Everybody's doing something. I'm doing absolutely nothing. Okay. Walmart's going to happen for me. It is. It wants to happen. Yeah. Yeah. A little bit of Walmart. Okay. A little bit of Walmart. 3 days left. Don't worry, I got all the time in the world. I already gave you guys the game plan. If it's flat, we can roll it. If it's profitable, we can get out of it. Okay. If it's a little bit unprofitable, I can also roll it, but to like slightly different strikes. I'm going to take all those into account, but I might not exit that today. I mean, there would have to be some precipitous sell side activity for me to want to exit that today. Speaking of precipitous sell side activity, okay, the NASDAQ, I know that looks big, okay, but it's not. It's not a very big move, and the contract size is light and fluffy, okay. It's starting to pick up though out there a little bit. Light and fluffy. All right, onward from there. No, I don't see where the moves are coming from. Meta, okay. No, really. There's a fundamental reason why this crappy thing is worth what it is. By the way, if you haven't noticed, I'm not much of a fan of Meta. Okay, I actually Zuck has grown on me over the years. He really has. Okay, he's grown on me. He's a big boy. Okay, he even gets in a ring with. If you guys didn't see that, I was talking about this like a week ago. They had Zuckerberg in a ring with a real MMA fighter. Okay, and even the MMA fighter said after the thing, he's like, "Oh no, he held his own." I have a little bit more respect from the geek from Harvard that is now fighting in the MMA. Okay. But I still think his company is a big pile of crap. Okay. It's a website, not even well put together website to which nothing has really changed on the site either. I mean, I have no idea. Okay. But yeah, he's got that going for him. But then there's Nvidia. Okay. Where this is one where I just don't like the moves that Nvidia has made over the years. Okay. It's very sketchy to promote stock price. Okay. Some of the deals that they've done, and I don't have to like that one. I don't think, and I'm serious when I say, I don't think that valuations can come anywhere near close to harnessing what Nvidia deals and so forth are doing. It's impossible. It's like worthless. So yeah, it is what it is. Anyway, moving along. But just remember that Nvidia is at a 46 PE, but Walmart is right on its heels. Okay. Every time that you think of Walmart at a 39 PE ratio, okay, I want you to think of a Walmart greeter. Welcome to Walmart. Don't worry. They moved to the NASDAQ. They're a tech company now. By the way, this has nothing to do with the spread on that I have on. I don't care. Spread that I have on, don't care. But like, welcome to Walmart. Okay. And there's a naked baby that like runs by you. It's good stuff. It's good stuff over there. I know. That's when somebody says, I don't look at PE ratios. I love like that's so you just stick the head right in the sand over there when I'm going off on PE ratios. Is that what you're telling me? Yes. Okay. All right. Anyway, I'm still quite a ways away from profitability in Walmart. Silver, okay, you're killing me small, silver. I still have plenty of time in silver, okay? 17 days, $8 expected move, okay? Got you right where I want you, okay? I'm not wrong. I'm just very, very early in there. And I'm going to be shopping today, tomorrow. I'll be shopping for some spreads, okay? It's, again, people talk about like holiday trade and so forth. Yeah, it's a little slower out there. There's no question. Okay. but price is still price. And if I can get a good fill in a liquid product, okay, I'll still take advantage of it. I don't want to have 2 weeks of like no trades. And I actually traded a lot yesterday because I closed Christmas trees and I opened shadow clocks yesterday. I say I traded a lot. It's a lot of contracts, in those trades. I traded a few hundred contracts yesterday just in the Christmas trees, which each Christmas tree is 13 contracts, and I had a lot of them on. And then obviously the shadow clock, which is volatility futures contracts. So yeah, but P&L today, not a whole hell of a lot going on. I am massively unchanged in the day. All right, back over here. Okay, FOMC minutes. Let's talk for a brief moment about FOMC minutes. I have no commentary like on what the FOMC is going to say. Like I don't really care about that. But what I do care about is the market, does it see anything in here? And survey says not really. There's $20 of expected move left in today's trading session. Okay. There's $20 left in it. And it is what it is. Like I'm going to sit here and kind of watch the tape a little bit. That seems low though. Like the FOMC minutes, I'm just not sure anybody cares that much. But there's probably some differing opinions in those notes. That's the only thing I would say is there's going to be differing opinions. Meanwhile, Trump himself, okay, has been teasing more about the new Fed chairperson in just the last 24 hours. Okay, he had comments that going to be a new Fed chairperson. Okay, and he also said and he was poking fun at Jerome Powell, still thinking about firing Powell. Okay, yeah, interesting commentary. That was interesting commentary. It didn't really move markets at all. Markets are, I think it's still a 90% probability. Over on Polymarket, that's a 90% probability as to who the new Fed chairperson is going to be. I don't think there's a lot of surprises there. Nevertheless, okay, Powell is going to finish out his term. It's a couple more months, whatever. Okay, a few more months, and he is out. Okay, getting out maybe on a high note. I mean, how bad is your Fed chairperson when markets are at all-time high? Like what else are you looking for? Okay, I mean, you want markets at all-time high. Okay, you still probably have an inflationary problem to some degree. Okay, at least according to Brandon. And that's right, Brandon. Just a conversation between us now. Meanwhile, okay, they want rates basically sitting at zero. Wait, for those of you that are not aware, the reason the administration, okay, wants rates down, okay, is they have a very serious issue with rolling debt over at 4.1%. What a lot of people just don't recognize is they're like, oh yeah, I want lower interest rates because you're thinking about buying a house, or I want lower interest rates because they're charging you 29% on a credit card, which they should be locked up. First of all, they should be locked up probably for giving you credit, but secondly, they should definitely be locked up for charging 29% interest rate. But what people forget about these interest rates, and just to put that wrap some context around it, there's basically $50 trillion of debt, okay, that rests on those rates. And even though a lot of that debt, let's say half the debt is, financed 2.5%, the other half of it, okay, is coming to fruition, meaning that it's coming to the end of its life, and the debt constantly has to be rolled over. So if you had paper that was at 1%, 10-year actually was, down that low. It's crazy. But for those of you who have no recollection of that incident, okay, there was a period of time, and this is actually the 10-year never got to 1%, but there's a period of time where you're sitting okay, at basically like 3%. But wait, we'll go back even further, okay. The certain debt, okay, dependent upon the debt instrument, was all the way down to 1%, not the 10-year. If you look at the interest rates, okay, there's a huge amount of, like, this is again 10-year, that's probably somewhere in the neighborhood, okay, as I said, of 2.5%. That 25, that's 2.5% in here, okay. And to take a quick glance at this, getting anything under like 1%, it was a brief and fleeting moment in time, okay. It hit that 0.5% in here, but most of the debt, if you average it together, okay, that's coming up is probably somewhere around 2.5 to 3%. Okay. All of a sudden, that debt, now you got to basically roll it into paper that's like 4.1%. So then you go to the 5-year, okay, and you look at the 5-year, and this thing was almost zero at one point. Most of this debt is like 1% or below, okay, and you're rolling it now, and you're at like 3.6%. The problem is the yield curve, okay, almost the entire yield curve is somewhere right around here, like 3.6%. There's nothing to really roll into that's like 1%, okay? So in some instances, okay, as wild as it may sound, they're rolling into an interest rate, okay, that can be 500 to 600% higher, okay? And that blows people's minds. Can you imagine if you rolled debt from 1% and had to roll into 4%? Okay. Like, what do you think about that? You know, oh, you're screwed. Because if this was like a mortgage payment and your mortgage payment was $5,000, okay, your mortgage payment, let's say $5,000, but that was just the interest, not the principal in there. Okay. But if your mortgage payment, just the interest portion is $5,000, and you're like, if you had like either a HELOC or if you actually had like a variable rate ARM, once the ARM unlocks, there's a control mechanism on there. But let's say that the ARM unlocked completely. You go from like 1%, you're paying $5,000, okay? And all of a sudden it jumps to like 4%, you're screwed, okay? Your interest rate could jump from $5,000 to $15,000 or even $20,000 a month, okay? Now, put that to, $20 trillion, okay? And that's why they want rates down. I'm trying to put this into the most simple context I possibly can, doing a terrible job of it right now, but I'm trying to put it in the most simple context. And when you start looking at the, there's actually a site for this, okay? And I don't mind, I can give this to everybody. It's treasury.gov, okay? He's a good looking man. I'll tell you what, he's a good looking man. I love this site. I'll tell you why I love this site. First of all, he's a good looking man. I don't care whether you like him or not. Okay. I don't like anybody. It's fine. Okay. Right now, I don't even like my wife because she spiked my coffee with freaking soap. That happened, people. But when you start to look at this, you can look at some of the data, right? And on the data, look at the par yield curve. Okay. And you can look at daily treasurer's rates, yield curve rates. Anyway, okay, here. It's just the 5-year, the 7-year, the 10-year. Okay. So I'll pull up, let me go back to data over here. Okay. This is the fun one. It's a fun one. Okay. Why is it fun? By the way, this is all of 2025. I don't want all of it. I just want current month. There we go. Current month. I want you to see what the yield curve looks like right now. Why the hell is it current month 25? Current month. Okay. It's not current month, you monkey. Anyway, I don't know why the whole thing is showing up. Okay. I'm very confused. Oh, you have to hit the word apply. Not confused anymore. Oh, okay. You have to hit a word apply. What I'm trying to show you, okay, why they want rates lower. There's where rates are right now. Tell me, okay, if you're Scotty, it's a good looking man. Okay. If you're Scotty, where are you going to roll to? You're going to roll to a 1 month at 3.7? You're going to roll to a 2 month at 3.7? Maybe a 2-year at 3.4? Oh, the 30-year at 4.8? You screwed. The yield curve, okay? It's like pretty much flat. You screwed, okay? This is impossible to roll debt in. So if you had 10-year paper and your 10-year paper is coming off at 2.5%, okay, you can roll to anything you want, but you're going from 2.5% to like 3.5 or maybe even 4. And there's a lot of debt though out there also, like the 5-year stuff. The 5-year stuff was rolled right during COVID, which would have been under 1%. Now you're going to roll to what? 300 to 400% higher rates. It's wild. So anyway, okay, it's going to be tough. It's going to be tough. The debt is going to explode. Okay, yeah, I'm bringing him back up over here. He does not look like me. Okay, looks more like Bierman than me. Yeah. Yeah, you stand quiet over there, huh? You don't want to get sucked into this conversation, do you? Okay.
No, but I'm thoroughly impressed. You've gone like Kaufman academic today. You went fundamentals today, which is just not like you.
It's just I'm getting Don's getting frustrated. I just get very like upset because everything I hear, man, is like, why is this trading at this level? And why did Google move 3.9 cents today? And like it's all garbage. It's everything. Okay. Everything. It reminds me of like, I'll sit there certain mornings, okay, with my youngest, okay, and we'll like flip through like a Twitter feed or whatever. Okay. It's just ridiculous video after ridiculous video. That's what the financial media has become. The real media has become that too. It's just ridiculous video after ridiculous video with there's no reality whatsoever in it. You don't even know if it's AI. Okay, doesn't even matter. Speaking of that, by the way, the latest thing that we 3D printed here, I was talking about my youngest.
Mhm.
Check this out, Jeff. Okay, I don't know if I can actually show it to you on here. Okay, if it
No,
comes
I
up or
can
not.
clearly. It looks TheoTrade.
It is. Let me see if I can actually get it to come
Is
up.
that a 3D printer of TheoTrade?
Yeah, it's cool, man. But what's cool about it is, oh, there, I can see a little bit better now. He didn't have, there's no model of this. So he actually went in and built a three-dimensional model of our logo and printed it. And even my older son, he's like, how the hell did you do that? He goes, a little bit of math, a little bit of this. The important point though wasn't that he was able to actually build it, but he actually built the stand for it too, all in one print. It's pretty crazy, man. I could not have done that. Okay.
We got a future mapped out for that kid.
I could not have done that myself. And I'm actually I've played with that thing. The printer's fun. By the way, I got new toys. Okay. We bought a 3D printer for him. Okay. And then air hockey table. I'm very happy about the air hockey table. I was talking about that earlier. Okay. I just if I could complete the circle of life and get golden tea in the house, I'm never gonna leave. That's it. Okay. Anyway, okay. By the way, Tim was saying importantly that the child can do it while Don's incapable of the same task. I guarantee there's a handful of engineers in here that might be able to do that. Handful. Okay. It is not easy to make your own three-dimensional structure. Okay. That one's freaking perfect too. It's not an easy logo to do. Quite impressed. What are you covering today?
Last installment of Fibonacci's, and we'll be done for a decade.
Oh, yes.
So I'm
Okay.
going to attack the Fibonacci spiral, which is it is the deepest, darkest down the rabbit hole of all the Fibonacci tools. It's the hardest one.
By the way, I'm cracking up over here. Okay. I can do it in 5 minutes. He's 11, man. He's 11. Okay. You are, he's like, studied as an engineer. Sorry. I was cracking up about that. Um, all right. So we're almost done with our 618s over here.
Yeah.
Nice. Okay. It's a good topic to cover in here. So I'm still sitting tight with a couple of the positions. Obviously, Walmart, XLF. Okay. Right on the dance floor still. I'm not even going to make a decision on XLF until early next week. And the fact that we're kicking off the new year, we should see a little bit of volatility. I think the XLF is still in a decent position right now. Not too concerned about it. I'm going to be shopping more trades though today. Jeff, I got to turn it over to you. I realized I gotta hop off. It's time for me to go. Okay, got places to go, people to see. Ladies and gentlemen, here he is. Jeff Bierman is all yours for the next hour.
All right, so let me kick this off by saying good morning and welcome to the second hour of TheoTrade. I am Professor Jeff Bierman. I am broadcasting live from Chicago, and today is Tuesday. It is December 30th. One day to go, December 30th, 2025. Good morning, TheoTrade members. It is officially 14 degrees today, 14 with a high of 18, and then we go back down to 12, but we'll break out of this by tomorrow. So damn, it's cold here in Chicago. The Windy City, yeah. So I could go through the list, and it's a laundry list of saying hello to the usual suspects, but I have so much to say.